Negative really throughout the whole session, but in particular towards the end there, much like I suppose we saw yesterday, there was a bit of an acceleration in terms of the selling.
We saw three key factors weighing on the Australian market, and two of them were offshore factors. One were the numbers coming out of China, those PMI numbers, which came in at a 32-month low at a reading of 50.4. And secondly, the European worries back again in focus. It does look like the European Financial Stability Facility, the issue related to that, we've already seen maturities cut from 15 years to 10 years this week because of worries about a lack of demand. And Italy's 10-year yields continuing to rise 7 basis points overnight to 6.1%. In the last few weeks, we've seen it rising 40 basis points. So still some worries about Europe. And of course, thirdly, here domestically, we did see an interest rate cut to 4.5%. It is the only move that the Reserve Bank has made in a year. But looking at those three factors, it looks like the domestic factor of an interest rate cut had the least bearing on our market, a very short-term impact before our market really eyeing overseas developments. The US futures, which have been down all day, the S&P futures down by about 0.8%. And if we have a look at the impact from those interest rates, well, having a look at the intraday graph of the discretionary retailers tells you a lot. This is Myer during the day, 2:30, we saw the interest rate decision come up, a little bit of a rise, a little bit of a fall, and then a rise and a fall at the end. So not much of an impact in terms of share prices. And then David Jones as well, 2:30, we saw a bit of a rise, but by the close, lower than one of the lowest points of the day for David Jones' share price. And I guess it's because we have already seen this interest rate cut factored in by the market. If we have a look at David Jones and Myer up by a massive 28% in the month of October, and we've seen David Jones rising by 12%. So unfortunately, not a good day for the Australian market. Of course, very light volumes with the Melbourne Cup holiday in Victoria, and of course, a lot of the Sydney office probably at the pub as well.
Stephen, I wanted to get your thoughts on one of the sectors today. You mentioned them before. They got, I suppose, under a fair bit of pressure today. The banks, I suppose, following on from what we saw on Wall Street overnight. Look, what is the big concern surrounding the sentiment with the banks, and how much has it got to do with MF Global?
MF Global has certainly hit sentiment, although it's not big in the global picture and the scheme of things. We know that problems do tend to start in the periphery and then spread towards the bigger players. We've seen that in terms of Lehman Brothers, in terms of the Eurozone crisis where it started with Iceland, and now we're seeing problems in Italy and Spain. So I guess the market keeping one eye on the financial sector. It's certainly not good for sentiment given those problems that we are seeing in the Eurozone, and the market really concentrating on some of the developments in the past week in terms of, I guess, a bit more uncertainty around Greece, with the Greek PM signalling that those Eurozone agreements around Greece will be put to referendum. And also, I guess, if we have a look at the 10-year yields in terms of the Eurozone, we're seeing them get worse as well. So a lot of concern in that financial sector. Of course, we did see a rate cut today as well, and hopefully that will help the Australian housing sector a little bit, but certainly not a huge reaction in terms of the big four banks. We've already seen Westpac, Commonwealth Bank, Bank of Queensland coming out to announce a 25 basis point cut in terms of their variable rate, and we are seeing the NAB and the ANZ on review. But altogether, if we have a look at this rate cut, it should have a positive impact in terms of the shares, and we didn't really see a lot of that flow through. And if we have a look at the month of October, yes, the Australian market had a fantastic performance with a rise of more than 5%, but if you have a look at the US market, we saw a rise of more than 9%. So the Australian market once again underperforming despite the bias towards cutting rates. Indeed, we've seen an interest rate cut. And if we have a look at how the interest rate cut benefits the Australian market, well, manufacturers who are trying to compete with the rest of the world should see some sort of benefit in a weaker Australian dollar. The retailers will hopefully see some sort of impact, I guess an early Christmas present going into Christmas season, and the mortgage holders as well. So altogether, a little bit disappointing that we didn't see a bigger reaction here domestically on that interest rate cut. But I guess the market really worried about MF Global and the hit to banking sentiment.